Darren, you say that that they have been de-risked, but regulators seem to only be getting started in the space when it comes to crypto, and especially buy now, pay later. What does that bode for the industry this year, or does that actually make it more appealing, more regulation?
Yeah, look, I mean, thanks for having me, first of all. But when you look at the space, I mean, regulation tends to come pretty much every year. And the industry generally managed through it very well in the past cycles. And I really don't see any exception to this. There may be more disclosures required and some credit quality checks from the CFPB on BNPL. But remember, the fintech industry is broad, and we have names like Visa and MasterCard that really participate in various aspects well above and beyond BNPL, merchant processors like FIS, and then B2B payments and others. The most important point I'll tell you is that it's very rare you see 2 years in a row of underperformance in fintech stocks. The last two times was 2010 and 2016. There were some aspects that underperformed. The very next year, there was outperformance, for example, by Visa, MasterCard, 55% up in 2011, 45% up in 2017, with most other years outperformance as well. Regulation is always going to come, but we don't think that's going to stem the opportunity to follow up and outperform what was a tough year for fintech last year.
Darren, part of the reason, though, that some of these new names that have come to the market in the last little bit, like Coinbase and SoFi, Robinhood, have been able to grow so quickly is because they can move fast and break things, that old Silicon Valley adage. If there's more regulation, doesn't this put them in greater competition with, say, the banks and the larger fintech or payments companies?
Yeah, look, I mean, at the end of the day, first of all, a lot of the larger fintech companies are participating in the same trends as what you're seeing from Coinbase and the digital wallets. And again, you brought up Square earlier. Square obviously was a COVID beneficiary in some regards, given its Cash App business, but it has its other side of the business, that Seller. Right now, estimates are still pricing in a bit too much from the pandemic, extrapolating too far. We think that it checks all the boxes on the other side. It has buy now, pay later as a theme. It has crypto as a theme. It has digital wallets in the Cash App side, and its convergence with software and payments will really differentiate it long term. It's rare you get these kinds of stock at these valuations. Square or Block being one of those examples.
Darren, I wonder if you expect any legacy financials to make a major move, either organically or through acquisition this year. I just try to make plant a real flag in the space.
Look, I absolutely think M&A is going to pick up some steam this year versus what we've seen the last couple of years, and valuations coming down is a part of the reason for that, right? When you think about the last couple of years, and we talk about this in a report we published this morning, the magnitude of IPOs and SPACs that came to the market was really off the charts for fintech. In fact, we had $200 billion of more capital that's publicly traded in the market now for fintech from just new publicly traded names, IPOs and SPACs in the last 2 years alone. And so the scarcity value question was coming up and valuations were high, which made it hard for M&A. However, with this reset lower on valuations, I absolutely think not only are you going to see some banks look to acquire into some of these fintech offerings to help accelerate growth, but some of the compounders or the legacy fintech stocks that have used to be very good acquirers probably will do more today and more this year. We're thinking FIS will buy some assets, PayPal, Visa, MasterCard are probably all going to be on the hunt for good tuck-ins.